All right, my friends, this is our class assignment of mutual funds. Now, instead of doing this in class, I'm going to go ahead and let you do it online. I think you can take some time and do some better research than just trying to fumble through this during class. I think it'll be a lot of fun for you. My friends, this is the heart of your investment plan, especially as you look at your 401ks. For those of you who are fully employed, and everyone else, you're about to be fully employed in the next few years. This is going to be your retirement vehicle also for your IRAs. Instead of trying to invest in company stock as a sole investment, let's look at mutual funds. So this assignment, we're going to look at 5 different funds. All right, and these are the funds that we're going to look for, as we discussed in class. Large cap, medium cap, small cap. Pick any 5 of these. All right. To research. We can use Fidelity, we can use TIA CREF. I also have a Vanguard site up for you. And what we're going to do is this. We're going to look at the funds, name the fund. We are going to look at the 1, 3, 5, 10 and year and lifetime average rate of return. So we have some good research, see how fast they're growing. Morningstar rating of the fund, what would that be? What's the expense ratio? Other fees associated with the fund? What is the load, the inception date, risk level, the top 5 companies to invest that this fund is investing in, and again, why would I even want to invest in this fund? So we'll make it pretty simple, and then of course I have this form in a PDF fillable form for you. So all you have to do is type in your information. So let's get to this. So I'm going to use the Fidelity website. Fidelity is in our backyard. They're located in Westlake, their main corporate headquarters. Wow, this could be a great company for you to start your financial career or your just career in general. Learn a lot of great things in the finance world, and they always have a training program as well. So you might want to put this on your radar. Here's what Fidelity looks like. If you want to start opening an account, you can do that right here. Right now, we just want to utilize their great research. So I can go to News and Research. So I can look at a lot of great things to increase my financial knowledge. Get back over there. There's exchange traded funds. There's initial public offerings. We're just going to look at mutual funds. We're going to try to keep it as simple as we can. And here we go. So I'm going to look at right now, we want to look at 5. Let's look at all assets. All right, that's what we're looking at. We're going to look at the fund picks from Fidelity, and we're going to look for high returns. That's going to give us about 62 funds. If we just left that open, as you saw, 333. I really want to look for high returns right now because in the stage that you are in for this class, more than likely we need to get aggressive allocation. We want to go aggressive risk so we can really grow some retirement over the next 20, 30, 40, maybe even 50 years. Let's view those funds right there. Again, you can utilize this for your IRA. You can utilize these for your 401k. Whatever company that you're with, the Fidelity may be the company that's the fiduciary responsibility that's housed in, but at least it gives you ideas of how to research. And so you can research this in a lot of different ways. You're going to see all of the funds right in here. You can look at 1, 3, 5, 10 years, lifetime of funds. So that's how I would start picking it. I would start picking it by the fund that we are looking for. So right now we could go down this route and pick a nice 3-year. There's insurance. I mean, there's equity funds right in here. I'm going to go right here and look at the fund that I picked. I picked GQG Partners, U.S. Select Quality Equity Fund Investor Share. So this is an equity, which is stock. So they are investing in the stock of large companies. Let's see their returns. They are a higher risk, they have high returns, and they have low expenses. I'm pretty excited about that. you can get a plethora of information right in here. There's the 1 year, 44% increase in 1 year of the fund. That's pretty incredible. 3 years, 18%. 5 years, 19%. Lifetime of 17%. If I quickly utilize the rule of 72, and I had 72 divided by 17, that's 4 years, my friends. It doubles every 4 years, your money. Is it going to be that way in the future? We don't know. But we know it's growth, and that's what I think you're wanting at a younger age. Again, as we mature, we may want more blended, and this is a large cap fund right in here. So this will be one of the funds you could look at. It's mainly in domestic stock, okay, and then we've got some foreign stock, and a little bit of cash, and just a few other things right in here. This will tell us what is the market sector. A lot of technology, a lot of healthcare. All right, that's basically the big blend that they have, the weight of their portfolio. Consumer cyclical stocks, communication stocks, energy, financial services. So it's certainly spread out through the economy, but you can see big things in technology and healthcare. Now, there's your summary right in here. So you can look at all of these items. Fidelity just does a really nice job of giving you some great research, hypothetically, if you've invested money, what it would look like. We have the fund inception date, 9/28/2018. It's a relatively young fund right in here, going just on 6 years, about to be 7 pretty soon. Ratios are at 0.7%. Anything under 1% is considered a really good deal, even if this was a 2% fund. Again, so the expense ratios basically mean once a year they're going to take out 0.72% of your total amount of money in that fund for their expenses. So it got up to $1 million. You're looking at about $7,000 a year that they're going to take out. Hey, I'll take that. You can have a little bit if you're giving me a lot. Net asset value, the minimum to invest is $2,500. And again, start looking at all of these different items right in here to get more research for your investments. Here are the top 10 holdings. All right, we got high tech, we have pharmaceutical, cutting edge. I think you've heard of Google. I think you've heard of Amazon, United Healthcare, a little bit of natural resources. So I have some oil and gas in there. All sorts of great information. So again, performance and risk. You can look at these items. There's the ratings. Okay, so overall Morningstar rating is a 1, 2, 3, 4, 5 right in here. Again, the composition, if we want to go into everything that they own, you can find that right in here. Their fees and distributions, again, there's our fees right in here, and of course we could view all of it right there if we wanted to. The fund managers, again, if you want to really get yourself inundated with some great information. This is their strategy, this is the risk, and any disclosures right in here that they'll tell you about. Again, there is nothing guaranteed in the investment world, but it's looking pretty good right in here. I'm kind of excited about that. So, if that's my play, this would be one of the companies that I'm going to put of the 5 mutual funds for this project. So, let's see if we can get back to our project here. Give me a second. So there we are. Other funds we could have looked at too. I just think Fidelity does an awesome job. Anything that you're using, your parents using, Vanguard is another great site. So this is a PDF fillable form. This is how easy I've got it for you here. And it's yours, so you get to keep this and look at it for the years to come. So I copied in. This is the fund right in here. These are my returns. The 1 year is 44, the 3 year is 18, the 5 year is 19. I don't have a 10 on this because it's not that old. That's okay. If you can find a 10 year, if you can find a fund that has a 10 or 20-year rating on there with high interest rates, payable rates, that's pretty powerful. That means it's gone through this entire millennia over 20 years. If you have a 25-year fund, for at least for right now, that's weathered quite a few storms. Lifetime is 17%. The risk is a high level of risk. The only way we can get these numbers is it's going to be a high level of risk. The expense ratio is 0.72. I'm putting that down there. The inception date, and these are the 5 top companies that they simply list for you. So that means they own the largest amounts of stock in this one: Nvidia, Ellie, Microsoft, Alphabet, Amazon. That's 1, 2, 3, 4, 5. Why do I like this fund? Well, it's got great returns. It's invested in companies throughout the global economy, especially tech and health. So that would be my number one. You're going to fill these forms out 1, 2, 3, 4, 5. You're simply going to resave it. When you resave this form, I would put your name on it, like Mutual Fund Project, whatever your name, you know, put your name in there. That way it's very easy for me to find. Let's get that back here. And again, here is the assignment. There's Fidelity, there's Vanguard as well, which is another great site. I just think Fidelity kind of has it done easily. I could have easily looked into ETFs, exchange traded funds. I just picked a mutual fund to give you a quick example. There's how you download the project. When we do a student view, let's hope it turns out right. Perfect. So you have a due date on this. It's now going to be done online. So again, gives you more time and ability to do some research. Check the due date. I will accept it 1 week late. Anything past the due date, it's got a discount of 50%. This is a 50 point. It's a nice way to earn 50 points and really gain some really good business acumen in mutual funds. All we do, start that assignment, we're going to upload the file right there. We upload that file. You've named that PDF, your name, mutual fund project, pop it in there, submit it. We have ourselves a winner right there. And that will conclude what were in-class assignments. So we'll just call them class assignments for the course. All right, that we would do. There's other things that you have to do as well, but I hope this will help you. And again, when you use this mutual fund strategy, so when you find the 5 funds there, my friends, and that's what you would start putting into your retirement plan. Okay, you're going to pick those 5. And so when you have a 401k, or even if we started with an IRA, we would just simply say, for every dollar I put in, and you can work this with the company, I want 20% in 1, 2, 3, 4, 5 different funds. Now you have diversification among diversification, and you can. The goal here is to average somewhere around 12% per year over your next lifetime of work. So you have a nice big retirement fund, down the road. Hope you like it. Hope it helps you. And that concludes our class assignment.